The idea is that you can coordinate large communities of somewhat niche labor forces around tokens, kind of using those tokens to induce labor, but also creativity in particular niches. I think if you look back kind of in the annals of the gig economy, the two biggest market leaders, Airbnb and Uber, they both explored what it would look like to share network upside with their vendors. Right. And they did it back in, I think, 16, 17 in the form of stock options. Ultimately, those strategies were blocked, but the message is still very clear that earlier in their growth, they did look for ways to supercharge the network and build sort of a distinctive reputation and reward system with their vendors. And so I think that same logic continues as the regulatory climate becomes clearer for rewarding vendors with upside of the network that ultimately they helped create.
Hello, everyone, and welcome back to another episode of Mind with CoinFund. I hope you're all having a great start to this new year, likely to be a banner year for crypto. For listeners tuning in for the first time, my name is David Pakman. I'm head of venture investments here at CoinFund, and today I'm joined by my co-host. Welcome to Mind with CoinFund, CoinFund's investor, Bobby Beniers. Bobby, how are you? Tell us a little bit about you and your background in crypto and everything we need to know about Bobby.
Awesome. Thanks, David. And super excited to be joining Mind with CoinFund for the first time. A little bit about me before we get into today's topic. At CoinFund, I'm a seed and venture investor alongside you, David. And I've been doing crypto investing professionally for over 4 years now at a number of firms, including first Matrix Capital and then Polychain Capital. I like to think of myself as a technical investor. I came to crypto from my interest in computer science and background studying that. So leave it to me to dig into the nitty gritty with some of our founders like we're going to do today. So excited for the conversation. Happy to be here.
So glad you're here, Bobby. You've been a great addition to the CoinFund team. Before we get into today's interview, since we're a few weeks into 2025, I'd love to know what sort of verticals of Web3 or Web3 technologies you're closely paying attention to as we're getting started in the year.
Sure. Obviously, super exciting time for crypto. I think, as you said, 2025 going to be a banner year for sure. As far as what I'm paying close attention to right now, I think it's pretty hard to ignore the intersection of AI and crypto at this stage in development, whether that's kind of the agentic frameworks that are popping up or, even the proof of humanity stuff going on at WorldCoin. So kind of tracking that, I think that's one area that January of 2025 is going to look very, very different from January of 2026. So excited to see that development kind of continue. Have long been excited about scalability and kind of growing the throughput of blockchain systems. I think 2025 is going to be a great year for kind of reaching a critical point in that development and seeing what kind of new high throughput applications we can build. And then lastly, super excited to be on this podcast because DePIN is definitely one of those categories that I think is going to have a breakout year in 2025. The development of DePIN has really accelerated. New projects joining the space, kind of hard problems have been thought through for a while now. And I think, it's one of those spaces in crypto that really has the ability to change human behavior on a pretty massive scale. So like I said, super excited for the conversation today and ready to get into it.
Great, Bobby. I guess for me, what I'm excited about this cycle is I really think this is highly likely to be an adoption cycle and not just a narrative cycle. I think we've worked really hard for 5, 6, 7, 10 years building a lot of infrastructure for Web3 and decentralized applications to launch, scale, get customers. We've worked hard in the last 3 or 4 years on simplifying a lot of that onboarding experience, both for traditional finance purposes and also for like new novel Web3 use cases. So I'm paying really close attention to projects that are being adopted by real users. Those can be institutional users or consumers. And one of the things we're going to talk about today, I think, is a sector and a very specific company that is likely to show really adoption at some of its earliest moments. It does, I think there are a lot of categories within DePIN where this will be true, but it'll be particularly true for the company we're talking to today. If you've been paying attention to crypto, as you pointed out, Bobby, in the last year or two, you've heard a lot of people talk about DePIN. And for those of you who don't know what those words mean or letters mean, it stands for Decentralized Physical Infrastructure Networks. And yes, crypto is buzzwordy and uses the worst nomenclature possible, but it is a truly novel mechanism for building decentralized networks, particularly two-sided networks where we have a supply side on one side and a demand side on the other. And we reward users for joining the network and being a part of it. We can reward the supply side or the demand side. And we've seen DePIN applied to a bunch of really interesting verticals. Like we've seen it apply to cars with our investment in Demo, cell phones like in Helium, really internet infrastructure, and even GPS. There are unique environmental applications also, like solar energy and weather data, and we're going to explore those today with a prominent founder in the field. So with that, I am excited to welcome TJ Ragsdale, the co-founder and CEO of Raad, a CoinFund portfolio company. Welcome to the show, TJ.
Thank you, fellas. Appreciate you guys having me on. I'm really excited to get into it.
We really like to start, before we get into your background and what led you here, with the big question, which is what is one thing in crypto that no one is talking about that people should be paying closer attention to?
Yeah, so for me, it's this idea of decentralized human capital networks. I think Brain Trust and perhaps BitTensor are maybe early examples of this. And it's maybe a bit dehumanizing to bundle in human capital networks with DePINs. So I think we'll probably see a distinctive category emerge here. But the idea is that you can coordinate large communities of somewhat niche labor forces around tokens, kind of using those tokens to induce labor, but also creativity in particular niches. I think if you look back kind of in the annals of the gig economy, the two biggest market leaders, Airbnb and Uber, they both explored what it would look like to share network upside with their vendors. Right. And they did it back in, I think, 16, 17 in the form of stock options. Ultimately, those strategies were blocked, but the message is still very clear that earlier in their growth, they did look for ways to supercharge the network and build sort of a distinctive reputation and reward system with their vendors. And so I think that same logic continues as the regulatory climate becomes clearer for rewarding vendors with upside of the network that ultimately they helped create.
Let's stay on this for a minute and give some concrete examples. You talk about Uber. An example there might be if you were an Uber driver and you actually held stock in Uber, you have an economic incentive to have Uber, the company, the network, do really well. You might take more action to help recruit drivers in cities where they're lacking or even recruit riders. You may also resist the temptation to drive for Lyft or other competitors because you've got more than just getting paid per drive. You've got this economic upside in the network. Is that kind of the incentive you're referring to?
Yeah, I think that's the idea. So I think there are kind of three benefits here, most of which you mentioned. So first is kind of just the early cold start problem. I think there's this kind of worry in financial nihilism that people won't be able to keep up with kind of the cost of living, and so they need to own assets. And so if I'm getting involved as a gig economy worker in one of these early networks, and I kind of see the precedent here of 10 years of DePIN networks where early contributors from substantial upward mobility, I may get involved in that network a lot earlier than I otherwise would have. The second is sort of, I think the way to think about those early network contributors are they're taking a risk on you, and you should be incentivizing them and rewarding them with as many sort of positive network activities as possible. So in the Uber case, of course, driving is great, but to your point, can you reward those 1099s sort of more like employees? Are they referring other vendors? Are they referring other drivers? Are they doing other activities that benefit the network? And then the third is stickiness, or maybe loyalty is a better way to put it, right? So a lot of these vendors, rightfully, as economic agents, will toggle between whichever networks provide the best pay at the best time, right? And that is fine. That's in their best interest. But if they have upside in your network, presumably they will double down both in the quality of their service and their loyalty to that network. And I think stickiness is very, very important.
Let's stay on the notion of online labor marketplaces and maybe discuss a little bit why DePIN can be better than the Web 2 alternatives. Web 2 saw hundreds, thousands of labor marketplaces, tutoring, babysitting. We, maybe it's labor plus experiences too, like Airbnb. In a bunch of them, tutoring and babysitting, there's like an economic incentive to build your client base if you're the tutorer or the babysitter, and then move off the platform, right? Because the platform takes a rake. But if you owned, some upside, some stock, some tokens in the network, you might have an incentive to stay on the platform and not move away. In Uber's case, that's not really a problem because all of the demand as a driver, comes from the platform. Is this one thing you think about related to labor markets, that like you want to keep the incentive to stay on the platform, or is that not really the problem you think incentives try to solve?
I think that is part of it, certainly. I think I mean, to your point, every large marketplace deals with the issue of markets developing outside of the marketplace. And that creates an issue around the quality of service being delivered, which I think is why a lot of the activity stays on the marketplace. But yes, having upside in the network does provide some stickiness and loyalty. I think the second piece here, and you'll start to see this evolve across other DePIN networks, is yes, the token does solve some of these issues. It supercharges the network, loyalty, cold start, et cetera. But I think you'll start to see a lot more sort of interesting proprietary technology being built into these marketplaces. I think that's where a lot of the stickiness and the loyalty comes as well. How easy can you make it for the vendors and the customers to transact? In our world, we're in sort of drone services, aerial imaging. And so for us, it's not only about enabling the coordination of pilots and jobs, but also some proprietary data delivery platform that only we have, right? This can be analytics, this can be processing of imagery, et cetera. And so I think you'll see those kind of two factors evolve in a lot of the most successful DePIN marketplaces, not just the coordination and the incentives, but also a proprietary engine that kind of enhances the quality of service the vendors can provide to their clients.
Awesome. Super exciting high level thoughts, TH. I think it's probably a good time to zoom in on what you've been working on over at Raad. You mentioned drone tech, but maybe telling our audience a little bit more about what you're building and why it's so well suited for the DePIN space.
Sure. So first dwelling on drones for a moment, I think this year may very well be kind of the year of robotics and drones. A lot of people have this notion of drones as a defense tool, but drones are only a defense tool because they're a really powerful kind of platform for observing and navigating the real world. In the US right now, there are millions of drone pilots, and roughly 500,000 of those pilots are commercially licensed. That means they're skilled operators and they have the ability to sell the deliverables from their drone, the images, the video, the models, and get paid for that. So you have this kind of really big underutilized supply base. So what we're doing at Raad is we're building the world's most cost-effective, just-in-time drone observation platform. For us, there is this kind of abyss in Earth observation, really just monitoring infrastructure and groundly activities between satellite and manual observation on the ground. And we think ultimately that white space gets filled in by a scalable drone coordination platform. So as mentioned, there's about 2 million drone pilots in the US. A quarter of those are commercially licensed. Our mission at Raad is to mobilize and reward that underutilized observation base, growing the supplier base and slashing costs of observing the real world by orders of magnitude. And for us, we look out there and there is precedent for sort of drone services networks that allow pilots to go find jobs across construction, agriculture, real estate, et cetera. But in general, pilots who participate in these networks feel overlooked and underpaid. They feel sort of, you get this feedback from folks on Fiverr, they feel like a commodity, right? And ultimately, if you look out there, these are skilled operators of machines. And our take at Raad is pilots are, in fact, the core assets of these networks, not only how well distributed they are throughout the real world, but also their unique skill sets and the unique hardware they bring to the table. And so what we're doing is we're flipping the playbook of the kind of traditional drone services networks and building the first pilot-owned drone network the world has seen.
Super exciting. I think strong understanding of the supply side of the network from that introduction. Maybe could you dig in a little bit more to the demand side of the network? So who might be paying for these services? How do you unify the supply of drone pilots and hardwares to provide a valuable service to end customers? We'd love to hear your thoughts.
Yeah, so I think on the demand side, the applications are really endless. When consumer drones kind of came on the market in, I don't know, the early 2010s, people use them for shooting weddings, sometimes real estate, but things have really gotten crazy now. So drones are being used for centimeter level accurate topographical surveys. They're being used for construction monitoring. They're being used for pest and agriculture health on farms. We have upwards of 20 commercial applications, telecoms, monitoring oil and gas facilities. The list kind of goes on. These are just eyes in the sky that have resolution or optical capabilities better than the human eye that can be used to monitor any piece of physical infrastructure. So, in our case, what we're focused on right now, what we think is the lowest hanging fruit, is primarily applications around insurance, construction, and real estate. So in the insurance space, right, you can imagine, especially living here in Florida, when a catastrophe rolls through, there's a whole bunch of uncertainty. Insurers are expecting claims to roll in. They got to send people up on roofs. It's expensive. It's slow. It's a mess. What you want to be able to do is monitor your portfolio of insured assets very quickly. And what you need for that is drone pilots with licenses in place near your assets with a way to go find those assets and image them. Construction progress monitoring is pretty huge. You have these 2, 5, 10-year projects, and every week for compliance purposes or progress purposes, you need to monitor that property. Drones are perfectly equipped to deliver that. I don't think we need to go too deeply into the real estate applications, whether it's for marketing purposes or otherwise. Drones give you a 15-minute solution, really immersive views of a property, piece of vacant land, topographical characteristics, etc. What I'm most excited about is just as 5 years ago, we had no idea that this breadth of applications would emerge. Some of our pilots are using drones for very creative use cases. And I think in 5 years, the demand side will be even bigger.
Each playing devil's advocate, you've described sort of two things that the supply side does here. One, they own the hardware, so they bring the hardware to the job. And two, there's a skill being a pilot. Over time, 2, 3, 4, 5 years, did the drones just get so smart that the skilled part of being a pilot diminishes in importance? Or maybe you could talk a little bit more about like just how skilled you need to be a really good pilot here.
Yeah, so I think a lot of this comes down to regulation. A lot of the autonomous routing of drones is now pretty good in a similar sort of spot to FSD for driving. But the FAA has certain restrictions around drones being able to fly beyond visual line of sight. And so for some time, not only will pilots be required for having eyes and control of the drone, but also for some time, there are applications where a pilot's skill on the sticks is still very, very important, right? These are denser areas where you're flying indoors, you're flying around trees, et cetera, et cetera. And so I think over time, and what we'd like to support is both those applications that require pilots on the sticks, not only from a regulatory perspective, but from a skill perspective, and those pilots who are really more interested in making money. They could care less if they're on the sticks or if they're driving to the location and putting their birds up. I think today, something that is maybe misunderstood about drone applications is you can sort of build a standardized solution where a drone is going up, following a predictable flight route. But there are a ton of high value applications from construction to oil and gas where pilots on the sticks will be required for some time. And some of these skilled operators are making really good money.
Can you give us a sense for of these 500,000 commercially licensed pilots? I assume they're the, sort of highest skill and most devoted to this as a career. How much slack or underutilization do they have? Will they welcome a platform that does a bunch of demand aggregation?
Yeah, so there's a huge, as in kind of many labor markets, there's a huge power law in earnings here. So I would say of those 500,000, you have sort of 20,000 super pilots that just gobble up the large contracts and commercial jobs, and they have more business than they know what to do with. So our goal here is twofold. One is to provide work and to mobilize the remaining 480,000 who are currently part time, but not really by desire, but by circumstance. They can't build a book of business big enough for them to be full time. The second piece here is if those 20,000 super pilots have more business than they know what to do with, what does a platform look like that allows them to monetize those leads and for the intermediate pilots to sort of rise to the occasion and compete at the higher levels?
Tej, I'm very interested in kind of this new category that you've outlined of human capital networks. And you mentioned Brain Trust and BitTensor as potential peers in this space. But I'm curious, what specific hurdles this new segment might face that hasn't been seen by more autonomous and on-chain DePIN networks, maybe with the likes of like Helium or Render or something. What challenges have you faced? And do you think these are kind of segment wide for human capital networks?
Yeah, so I think there are two sort of constraints on human capital networks, which I think are overcome manageably. So one is if you look at kind of protocols like ours or like Frodo bots, the way that vendors interact with the network is more active, right, than a Helium or a Hivemaker, where you buy a thing, you set it up, hopefully it doesn't go down, you earn tokens. Right here, we require more work from people. It is my take that, especially as artificial intelligence gobbles up certain jobs, there is a deep meaningfulness to this work. I can say as a fact that drone pilots love what they do. They are avid about it. They want to be on the sticks. They want to be out there. They want to build community. They want to earn tokens. And so I think this category grows, but there is a threshold for activity that people have to enjoy or want to do, whether it's about pure enjoyment or financial upside. So that's one key difference. I think the second is around the standardization of service or the quality of the service. The hurdle for us as the coordinator, as the network, is much higher to ensure that the quality of our service for our clients is standardized, right? You kind of know what you get when you set up a Helium miner. They're all the same. That's why they're able to have multiple manufacturers competing for the business. In our case, we're dealing with human beings, we're dealing with the real world, and we are hardware agnostic, right? Which means slightly different inputs from the drones. These drones, the way they're autonomously routed, can be slightly different. The way the pilots fly can be slightly different. This is the case for Brain Trust as well, right? They're a human talent network. With that comes additional issues around standardization and quality. We think these things are very navigable, but I would say those are the kind of two differentiating factors between traditional DePINs, infrastructure networks, and human capital networks.
Yeah, I think what you said is spot on, and it's something that I think about quite a bit. It begs the question of like, as DePIN as a category grows, we're going to try to do more complicated things that can be less automated on chain and therefore require some element of centralization to sit between the infrastructure and the customer, right? So I'm curious how you walk that line with Raad, between standardizing what kind of data is collected by your drone pilots and do like kind of package it up for your end customers. Like how involved do you as Raad Labs need to be in the decentralized network that exists?
Yes. So initially, our focus is to be less involved in the data processing and delivery and more focused on the clearing of the market and coordination of jobs. So that means initially, we start with simpler applications like insurance inspections on roofs, real estate, and construction. But over time, as we deliver to more demanding customers, the lift on us from processing to analytics rises. But we think the timing is actually really good for this. So if you think about what we're doing here, we want to enable a really wide base of pilots collecting data and to ingest as much of that data as possible and deliver it in a standardized way. So the sort of AI tool set around cleaning and scrubbing visual data for consistency is really, really good now, right? A lot of those tools are off the shelf, from the processing of the imagery to cleaning the imagery to annotating that imagery, features and change detection. And that is a tool set that we are building. We think the proprietary data delivery is a really important mechanism here to ensure that our clients get exactly what they need. And so that's kind of how we're thinking about it.
Is it important, Tej, that the data be coagulated over time into a data asset, or are they too ephemeral? Like, if you did a roof inspection today, that data times out, in 3 weeks. And so there's no sense in like building some big data repository that others could license or pay to use.
So I think there are two ways in which building that repository is important. One is having a snapshot of an asset of a piece of the real world, whether it's a building or a pipeline or a piece of land, before and after a large change event. So in insurance, for example, you basically want a pre and post catastrophe snapshot. And in that way, the pre will always be important. I think the other thing is, and you can kind of see this logic in the acquisition of Matterport by CoStar. Matterport was not a profitable business when that acquisition happened. The reason the acquisition happened was because Matterport had one of the largest depots of digital twins of the inside of commercial real estate properties that existed. And so in our case, our pilots will be imaging assets in the real world. And whether it's AR, VR, whether it's large real estate data aggregators like CoStar, there is a lot of value in external digital twins of assets as well. And so I think in that way, having that data stored in an accessible way for clients over time, as we have 500,000 million of these external digital twins, will be highly valuable.
One other thing that I think is really important to talk about when we discuss DePIN networks is just kind of rewards and the methodology that goes into them. I think whenever you have a way to programmatically extract value from a network, you're always going to run into people that, hope to push the boundaries of that and maybe earn a little extra for themselves. I think in DePIN that often looks like spoofing or kind of some way of contributing to the network and earning rewards without actually contributing anything valuable. So I'm curious, I think this is something every DePIN network has to go through, but I'm curious if you've kind of tackled this problem to date and, what are some of the ways that you've seen people try to extract rewards, without necessarily providing value?
Yeah, so this is something we're thinking about deeply is reducing gaming. I think actually in our case, it is perhaps less complex than others. So when you think about what our network is doing, we have a client and a client wants some imaging or video on a property or an asset in their portfolio, right? So these drones are going up and every image that they take is encoded with metadata about the location, right? That is very, very, very difficult to spoof. What we also do is we double check that against the geostamp of the pilot's phone when they're on property, right? So every pilot will, when they start a mission and they're on a property, we'll take that metadata, we'll compare it to the images that we receive afterwards. If they don't match, then something is up. Also, there's a simple check here, which is like you can see the asset that has been imaged and if it's been imaged appropriately. So we have on our end a quality assurance check that uses AI to ensure that the images were taken in an order and in a sequence that the customer wanted. Right. So we always have a check on our end before any payment happens, before any delivery of images happens to the client, that they are the right images, they're of the right quality, and they're in the right order. I think in terms of other incentives, something we're building is a referral engine for pilots. But you need to be referring pilots that can be 1099s on our network, which means they need to have a Part 107 license. The Part 107 license is it is a card, it is a physical card that we can verify. And so if you're referring a whole bunch of your friends and pilots that don't have licenses, there's going to be no reward mechanism there. I think there are also interesting sort of ways to embed hardware checks. I think IoTex is doing some interesting work around cryptographically verifying that hardware is real, that the owner that is hoping to receive rewards on chain actually does own that hardware and that hardware is in the right place. I think for our network, it's less gameable and spoofable just because you're dealing with imagery that can be verified against the real world. Was it the right location or was it not?
Yeah, super interesting. I think imagery is something that's new to this gamification or spoofing problem. So you might have the upper hand on the gamers at this point.
What I will say, Bobby, is something we're thinking about quite a bit is we now do have tools, bad actors now do have tools to manipulate
Right.
imagery, right? Whether it's deep fakes or
Yep.
otherwise. We don't think in the next year this is an issue that we're going to have to tackle head on, But you better believe in 2026, it is something we're thinking about. And I think if we're in 2026 and we have people trying to spoof the network by creating deepfakes of the physical world, I think we're in a really, really good spot because that means a lot of economic value is sloshing around.
Yeah, believe it or not, that's a success case. No,
So-
it'll be interesting to see kind of, I think every DePIN network evolves over time as they kind of deal with new threat vectors that come up. So, analyzing the images, laying in geolocation, time, metadata, et cetera, is kind of like maybe step one, and we'll see where it goes for step two. The other interesting conversation I'd like to have about rewards is more on the, as you said, like a lot of economic value flowing through the network. Most DePIN networks choose to reward their participants in their native token, which introduces some level of kind of speculation as to how much economic value is flowing through the network. Whereas other DePIN networks choose to reward participants with something like USDC, so that speculation isn't involved with the earnings potential of participants in the network. Where do you guys fall on this spectrum of rewarding people with either a stable currency or something that's volatile? And if you kind of choose or want to speculate about the volatile approach, how important does kind of incentivizing a community to be excited about the token price become?
So I think in our case, our answer here is based on deeply understanding the cohort of vendors on our network. So I think there's a really nice fit between a token mediated network and these 500,000 to a million drone pilots. To dig into kind of the archetype quickly, these are typically young ish men that are technology forward and first adopters of new technology, of new innovation. And so I think in their case, from our conversations with a lot of pilots, they are very much driven by owning upside in the network. Whereas I think there are other cohorts of sort of niche labor forces that feel more alienated and foreign from the world of crypto. They're dubious about it. They'd prefer cash. That is not really the case here. With that said, I think there's an important order of operations, which is when you release a token into the wild, right, it's kind of a beast of its own, right? It needs to be managed. And I think the better strategy is to build out a business that stands on its own two legs, use cash rewards if needed, understand where that network lacks or understand where it can be supercharged, and introduce a token with token economics and mechanisms that are surgically oriented around growing that network. So I think in our case, we're kind of straddling the line. There is an order of operations, but from our conversations with our supply side, which we want to be the largest drone observation network the world has ever seen, these guys are interested, are driven, and do believe in the merits of crypto and tokens.
Let's stay on that for a second, Teach, because if we contrast maybe sort of Gen 1 of DePIN networks, the buy a piece of physical hardware, plug it in the internet, collect tokens for just keeping it going. There's not a lot of supply side activity you can do other than keeping it going. But as you point out in labor marketplaces, there's a lot of different things you could do. You could recruit more pilots, you could recruit more demand, you could do more jobs, right? There's a sort of a discrete element of the number of jobs you do. And so you could design token economic incentive mechanisms that have different incentives for different types of human activities on the network. Do you think about it that way?
Yes. In fact, we think about this in two ways. One is there's a number of activities that we would like to reward, each of which has a different value to the network. So whether it's a pilot referral or you're offloading lead generation or you're training new pilots, right? There are a number of activities that we stand to benefit from, and we plan to quantify very tightly the value of those activities to the network and also understand if you've completed the activity well or not and embedding that into reputation. But the other thing is, I think there's a really cool element in human capital networks as opposed to traditional DePINs where it's almost like the different roles that you can choose to play in an MMORPG, right? You have the mage, you have the wizard, you have this, you have that. So we have some pilots in our network that, they have a full book of business and they really only want to do two things. They want to offload their new leads onto the network and they want to train new pilots, right? So you can imagine an archetype in the network whose sole job is he's an intermediate pilot and he helps us and helps Raad train up the entry level pilots to start competing at this level. And at this level is where he has all of these jobs in this lead gen to give them. And so you can kind of see you can see sort of a taxonomy in this network of individuals who specialize in a particular activity that they really want to do within that network, and it kind of being more expressive and interesting than a traditional DePIN.
Is it too early for you to generalize a few lessons about human capital DePIN networks, of sort of the attributes of verticals you think that predict positively of things that can be successful versus things that predict negatively? I mean, I might say like things that are extremely episodic and aren't needed with high velocity, sort of hard to get a lot of liquidity going in the personal, capital network. I don't know. What do you have any thoughts to that?
Yeah, so two things. One, I think that is generally right. You want a high volume of demand and transactions flowing through these network, but I think that's the case for any business really. I think the two other things are I think it is generally a much better fit to bring a kind of token mediated human capital network to niche trades of individuals who, for whatever reason, are underutilized. So whether that be crafts and trades like, being an electrician or a carpenter, or in our case, the drone pilots of the world, I think it's generally much more difficult to go the super broad aggregating spray and pray approach like a Fiverr or a Bark. I think the other thing is there are many of these kind of crypto communities that, yes, they're communities, but they're really oriented around token go up. I think as things go on and sort of artificial intelligence alienates a lot of types of work, I think really interesting international digital communities will form around meaningful work. So these drone pilots are avid. They want to connect with other drone pilots. They want to get outside. They want to collaborate on jobs together. And I think those sorts of communities are much stronger if built around kind of a common bond and piece of financial upside, which is a token.
Just to play the devil's advocate here, why do you think human capital networks are limited to niche trades? Do you say that it's possible that one day, like the entire labor force is coordinated by decentralized networks with maybe centralized intermediaries that, verify that the work product is sufficient? But why not expand this idea to a much greater audience?
I think that very well may be the case. Maybe because we are in the early stages. I think when you're at an early stage, it is incumbent upon your network to specialize and be really good at one thing. I think it's easier to build community around that. I think it's easier to convince clients that your, small token mediated network is legitimate if you're focused on one niche. But I think over time, removing intermediaries from any sort of labor market, whether it's generalized or specialized, does make sense. For us right now, I think the focus is definitely specialized
Yeah.
networks, and we'll see what
Yeah,
happens.
maybe the next step is, big corporations start to kind of implement this technology internally. So calling out Amazon to have their warehouses be coordinated by decentralized networks would be a good next step. Let's see if we can do it, guys.
There you go.
Maybe just some of the practical advice, Tej, on the comment you made sort of two questions ago. Like a lot of the DePIN activity is all about, token go up. But isn't that really the case with any economic incentive? I mean, stock options that don't go up at companies are kind of discounted heavily by employees. They don't really, it's like pay me more cash bonus because my options are underwater or our stock hasn't moved in 3 years. And these networks, even if tokens trade super rationally, are not going to just always go up, right? We're going to go through periods of macro challenges, which could, discount multiples, even if the underlying economics of the network continue to perform. So how do you build a network that has value beyond just like, hey, I'm here because token go up? Are you saying it's what's unique to this particular network is like, as long as the jobs are coming through and I'm getting high quality customers and I can, get more and more high quality pilots onto the platform, like that's good, even if the token price is not going up?
Yeah. So, I mean, I think if you look at some of these crypto communities in late 2022, like Solana rose from the ashes because it had activity on both the developer side and the user side. And when the token was down 95%, people still wanted to participate in the network. I think in our case, long as there's meaningful network activity occurring and pilots have derived value from our coordination and data delivery over time, they've built a reputation. Um, I think that is where the stickiness comes from. If you've solved a problem for your clients and your pilots, and even without the token incentive, there is still substantial network activity there. I think that's ultimately where you want to be. I think the other thing is, as a drone pilot, your reputation is very, very, very important. And so we're building right now, and over the course of the next year, a lot of these pilots will have built a reputation for quality, delivering in particular verticals. And I think once they have that reputation, that in and of itself is a monetizable asset. You remove the token price, they are still going to want to participate in the network because they have a unique access to jobs and future earnings power that they do not elsewhere. And so I think it's all about just building on the fundamentals. The token being high can be a great form of jet fuel, but when the token is not high, there should be something to come back to that solves a problem for both clients and pilots.
That may also be the answer to the won't AI, make drones be the big equalizer for drone flight is pilot reputation, right? After years of being great at this, do you want to take a risk with the low cost AI approach where you may not get the quality of the imagery you need or independent of the regulatory barrier to being fully automated, but you want to hire an experienced pilot here.
Absolutely.
Teach, anything we didn't cover we should be asking you about?
I don't think so. Maybe just to dwell on DePIN for a moment. I think we're at the earliest stages of DePIN. And so there are two things I think about quite a bit. First is there is a whole sort of operations and maintenance overlay that will have to deal with this infrastructure, right? Stuff will go offline, stuff needs to be transported from A to B. There will be on chain leasing and financing of all of this stuff. And even in drone land, right? Like part of the value of a pilot is what unique hardware does he own that's well fitted for a job. And so you can imagine interesting capital and financing marketplaces that really grease the skids of this coordination of drone pilots, where you're coordinating the hardware just as much as you are the kind of pilots themselves. And so when I think about human capital networks, there's going to be interesting composability happening between DePINs and other DePINs, as well as DePINs and human capital networks. I mean, you see stuff now with like Daylight and Demo, for example. That stuff will continue, but there will also be a human capital element layered on top of a lot of this decentralized infrastructure because it does require maintenance. It does have to get from point A to point B. There does have to be financing and leasing. And so I think while we're in early innings of DePIN, we're in like embryonic innings of the composability and the exponential effects that come from that.
Yeah, boy, the financing component of the more expensive or higher expense hardware components in DePIN networks, but that makes a lot of sense. You have seen around the more localized networks, even the non-DePIN ones like Uber, these sort of entrepreneurs that come in and say, I could own 5 cars and hire the drivers, and now I'm a little mini Uber entrepreneur. You would expect to see this maybe on chain though, right? You could see kind of the DAO structure coming in again to help finance larger equipment purchases on
That,
chain.
that, that's right. And something we're thinking about is kind of that regional operator model, where that's even another role in the network where an individual, a high quality intermediate pilot, is incentivized to ensure that the quality of service in his region is very, very high. To come back to Uber, not only do you have these mini entrepreneurs, but um, in the case of both Uber and Flexport, because of the volume of activity on their respective networks, they have such good credit information on their vendors that they're uniquely equipped to finance the vehicles that will be paid down via transaction volume on their own networks, right? And so in Uber's case, like of course, the terminal point is now to be financing their drivers' cars en masse. Flexport is going to be the same with Flexport Finance. Could imagine for Raad, right? We have this like deep trove of data on the consistency and quality of drone pilots delivering to our networks, we get to the point where a pilot has 50 flights and it's like, okay, it's time to go to the next stage of your career. Let's upgrade your hardware. It's financed by Raad and it gets paid down through your quality of delivery and consistency of delivery on the network, which is way off into the future. But I think there's all sorts of interesting arrangements there that we're kind of equipped to tackle.
Awesome, TJ. Awesome. Well, thank you so much for joining us, TJ. For those of you who tuned in, thank you so much for listening. Let's keep the conversation going. Leave us a review. Let us know what you thought. Tell us how we can do better. If you'd like to follow me on Twitter, my handle is Pakman, Pakman, and Bobby's is at Bobby_Beniers, spelled BOBBY_BENIERS. Tej, how can people learn more about you and Raad?
Yeah, sure. So the best way to learn about what we're doing is to head to the website. It is raad.com, RAAD.com. And you can also check us out on Twitter or X or whatever people call it now at Raad Labs.
Make sure you download us wherever you get your podcasts, and we'll be back soon to dig deep on ideas in the crypto space. Thank you.